Okay, guys, one more person and we begin. Yeah, so if you can hear me, yeah, type a 111 in the chat box. Yeah, do that quickly. I'm waiting. Okay, yeah, we're complete now and we're good to go. Okay, yeah, I can see that. That's a 111. Okay, 111 from Toby Williams, 111 from Segun. Um, okay, okay. Okay. So I think the fifth person joined and he just left. So um maybe yeah, I think I'll record this Zoom. It's gonna be available maybe on YouTube. So let's begin. Um, okay. So let me share. I'm gonna share my screen right away. Okay. Sharing my screen. So yeah, if you can see my screen, you could just drop a 222 in the chat box. Yeah. Hope you can see my screen. I'm going to clean this quickly. And this is DXY. Okay. 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 So let's start. Okay. Yeah. The Zoom is recorded. So guys, quickly, what I want to show you guys this morning is um how to navigate through your trading view and basically the top down analysis, like the step processes I go through before I send setups or make my analysis. So we're going to start from the daily. This is my trading view. Trying to zoom it. Okay, I think it's a bit clearer now. Auto. So the first thing you want to do if you're looking at any chart is you want to ask yourself what is the majority, what's the major move in the market. So you can see on the dollar index we're bearish. We're bearish, and bearish means you look for sales or sell setups move faster in a bearish trend. Yeah. So sometimes I go to the weekly for more clearance, and you see on the weekly we're having a ranging market here, and this is the maximum point. So what we want to do, we want to look into the most recent structure I will see on price here, which is this from this high to this low. I'm gonna admit him. So now the next thing you want to do is you want to go to um the daily time frame to you want to highlight the what you want to do, you want to highlight the key levels in this on the daily time frame. I think I'll just have to mute you. Just have to mute everyone. So what we'll do now is we already have a downtrend, and then there's a price decided to go up here, and the bullish move here was terminated by this resistance. You get, so we want to highlight this resistance here and go over to the smaller time frame to filter this, and connecting our trend line will have something like this. Yeah, we'll have something like this. This is a very clean setup here we have here. So it's likely that price, remember when you outline the structures on the daily and you zoom in, you need to erase some of those so your charts don't look messy. This is likely, like, this is very, very possible on the dollar index. So having this structure on the daily time frame, we want to go over to the 4-hour to concentrate on this most recent structure, because this is a price pattern that you're seeing here, a very vital price pattern, and this is what it looks like. Yeah, so this is the price pattern here. We're going to highlight it like this, the tip of the candles. Yeah, we use the tip because we want to be precise in our entries and calculations. So on the daily, we had this structure here, the first touch, the second touch, and the third touch, like the third touch here, and in between also we had this structure, the structure here, and price decline. So this would have been our entry for a few pips, because this is the overall trend. This bearish, this is the impulses. Then you notice this is the correction, and this is the correction here. So we're expecting another impulse to make it the third touch here. So what we'll do, we'll go over to the 4-hour, and we'll have a very nice looking structure here. Very nice looking structure, and we're going to zoom in to see what price has in stock for us. This is H1. On H1 here, this would have been our entry. Here with our stop loss a little above, and take profit somewhere around here for a start. I think risk to reward is about 1:9. So we're risking 1 to get 9, which is not so bad. And on break, we might also sell this structure on break of this level, but it's a whole another type of entry, not the regular breakout entry. So I hope it's uh, I hope it's understood at this moment. So we want to look for entry, our first entry here, and our second entry. This hasn't given us a re-entry yet, but most times the pattern, this is what the pattern looks like. First touch, the second touch, and the third touch, then most times it reverses up to 80% of this whole move from here to here. Yeah, so we could easily take out our fib, add Fibonacci to this um, Fibonacci retracement from here down to here. So we can have our take profit at the 78.6 of the overall up move, which gives us a risk to reward of 1:13, so which is not so bad. Yeah. Yeah, you see, you can see it's dropping. This is very nice sniper entry. So what you want to do is um let's check the USD card. Yeah, the dollar index, like what shows you the direction in the market. Yeah, like before you analyze any pair that has the dollar index, it's very advisable that you analyze the dollar index first, so as to save you drawdowns and losses. Um, Again, okay. So now that we have the direction for the dollar index, I'm just going to erase all these and we'll just focus on this structure here. Focus on this structure to outline. So we'll have an entry here, and also there's, I think this is an order block, a H1 order block for me right here. So we can also refine our entries after this closes to this other block. We just outline it with a ray here and here, the body of the other block. So around here we're expecting price to tap into this level before it continues dropping onto here. So we can have a re-entry here for for yeah, our stop loss a little above the high, and take profits down. You can use this equal low here as your take profit. Yeah. So I think I'm going to I think I should send this on the group. It's dollar index. Dollar index. So uh, we're going to look into, now we know our dollar index is bearish. Our dollar index is bearish. So meaning the dollar is weak. It's going to be weak. What should we expect here is let's see. Let's check for some neat structures. Okay. I don't know how this is doing. I'm just going to clean everything so we go all over from okay. Um okay. So now price, and we're going to move from weekly. Let's have on GBP USD. System's lagging. Okay, it's not this is available. So far, guys, I'm gonna unmute everyone so you can ask about right. Technically, is the if you have a stand assessment, you can make concept here. Personally, taking you through the process or how I look at the market, most times. So, yeah, you can ask your questions. Then you can unmute yourself and ask questions if you have any.
I have a question.
Okay, could go on.
My question goes if you want to start the analysis, is it advisable that we start from daily?
Yeah.
Mm,
Yeah,
always.
it's it's the best in irrespective of you, even if you're going for intraday setups or weekly setups or long-term setups. I think the first thing you should do is start from the higher time frame. In that way,
Hello,
can you hear me?
hello.
Yeah, I can hear you. Hello?
Yeah, I can't hear the other part you're saying.
You can hear me now, right?
Yes, yes, yes.
Okay, I was saying like irrespective of what you're seeing on a smaller time frame, I think the first time frame you start from your analysis is the daily time frame. Yeah, because most times you have setups that are way ready on the daily for an impulse momentum and on a bullish impulse momentum, and on the smaller time frame you're having a bearish setup. Yeah, that's how they trap people, like to be on the other side of the market, and then they drive the market impulsively to the other side. So the the daily time frame should be like a guide. You get should be like a guide to whatever you are seeing on the smaller time frame. Like here now, I wouldn't be buying in this market. Do you get? Hello? Are you in
Yeah,
there?
I'm
Hello, good
here.
morning.
Okay, good morning. Yeah. Because this structure here.
Uh, I want to ask a question.
Okay, yeah, you can go on.
Okay, do you use a support and a resistance? Because I'm seeing a resistance zone currently on the price chart of the DXY. I think it's adding as a confluence to the fall of the DXY index now.
Yeah, like what I see here is this is like a double top, but I like to call it an arc. Yeah, like this is an inverted arc. Yeah, so usually with what here is a very critical level to look at, maybe in the future, because we're looking at the weekly. So, but so far, this is we had a trend already, an uptrend. So this is it here. Hold on. So we had
Sorry,
impulse
please, can
correction.
you go to where the current price is? I'm talking about where the current price is now.
Are you talking of this level here?
No, the current price where it broke the trend line.
Okay. Okay. Let me zoom in.
If you can zoom in a little, yes. Exactly.
Yeah. So
Yes.
you mean this level here?
Yes.
Okay. Yeah, like the thing about support and
Okay. Sorry.
resistance. Yeah, I'm listening.
Sorry, please. Can you draw another trend line from that swing high there to the where the current price is, where you added that resistance? Yes, from that point down.
Yeah,
Yes, exactly.
I've already highlighted this. This
Okay,
alone.
sorry, I was not.
Okay. This alone is a continuation pattern, like what you are
Yes.
seeing here. The continuation pattern. So usually this is how we trade it. We highlight from the low here and highlight from the high here. So it's more like a running channel. So around here, on the long term, we're selling to here firstly, and down to this trend line here. Like it's a long-term bearish move on the dollar index. I don't know if you understand what
Yes. Can I ask a question?
yeah, you can ask.
As we are getting this, we can be having this good technical setup, and fundamentals can change, sometimes change the momentum on the direction of the
No, no.
analysis.
Like with multi-time frame analysis, you don't have to be worried about the fundamentals. Fundamentals, it will most times you will have just spikes. Those spikes are minor volatility. Like sometimes, like I think I had a setup on the dollar index. Dollar index, okay, and this was the sell here. This was the sell here. This was the sell I sold around here. My stop loss was here, and my take profit was this. You see that we had the move. This was, I think it was probably fundamental, but overall we still had the bearish move. You get, that's why you need to use stop loss, and you also limit your risk. You get,
Yes,
yeah, you
yes, I
need to,
understand.
yeah, you limit your risk to what you want to do. Something like if you use this stop loss, it would have hit, yeah, and we had another setup here. We had another setup here, somewhere around here, I guess. So we'll just have about 10 minutes. So this entry that was given to us here, yeah, would have sold on the third touch. Do you get? I don't know if you're following.
Yes, I'm with you. I'm with you,
Yeah.
sir.
So on the third touch, we were expecting a move down to 80% of this what do we have here? This channel. Hold on. This channel here. Yeah, so price is off the channel and we're expecting, you could use your fib to outline it. 78.6 of the total move to the upside is here. So we have our take profit here. And our risk to reward is, you usually have high risk to reward with setups like this. Setups like this. Seriously. Impressively high risk to reward. So I'm going to clean everything we have on this dollar index, and we'll go over to the 1 hour. You see what we saw on the 15 minutes was here, was this structure, price structure here. Okay, so most times you will find patterns inside a pattern. That's market fractals. Market just tends to repeat itself over and over again. So this is a well
High
organized,
probability setup.
yeah, and
So
like
waiting for the retest of the broken
yeah,
trend line.
yeah, and the broken trend line also has an order block. You see, most times you can, these are high leverage setups. On the H1 there's an order block. So around here, this is our trigger zone down to our trigger zone down to here. So we have about less than 10 minutes We'll have 7 minutes actually for this.
Can I ask a question?
Yeah, you can ask a question.
Yeah. First of all, I want to appreciate you for everything you're doing for us.
Yeah, you're
May
welcome.
God bless you.
You're welcome.
Then again, my question now is on the last statement you made about the order block.
Yeah.
Now, the order block, do you pick entry at the lower end, middle, or at the top of the block? I
You
don't know if
know,
you get my question.
yeah, I get your question. Let's look into the other block in person. So,
Sorry, sorry, sir. Can I answer him?
okay, you can go ahead
Okay,
and
the
ask.
other block is used as a zone. It's not just a particular entry point. It's a zone. That's why it is marked at the body of the candle.
Yeah.
So if you see a reversal at the zone, that is a zone. So if you're expecting a reversal at the zone, it's not the low or the middle or the upper body. It's a zone. So if you see a reversal candlestick at the zone, you
Yeah.
can place your trade.
Yeah, usually what I do, how I enter, I'm just going to give this as a free tip to everyone on
Nothing
this
much.
session. So what I do when I see other blocks, like valid other blocks, is I like to set uh, a sell limit at the body of this middle candle, the other block candle, like the this is a bullish candle, right? So the open price, I like to set a sell limit at the open price. Like usually you see the open price aligning with some numeric patterns, like it has a pattern like something ending with, you can have 92.5, you get, or 93. Like just round up. Once you round up the numbers, you have like sniper entry. Like you saw the trade on, that was, I think, step index. Step index. Yeah, we're just going into, yeah. So on step index, this was the other block.
I hope you are conscious of our time.
Yeah, we'll have about 4 minutes. So this was the other block here, and the sell limit I gave for this was about here. Yeah, that was the sell limit. 9371. I gave two sell limits, and the second sell limit was 9370.5. Yeah, so you see what happened, yeah. So it's just so accurate, and you see the drop, the sell off. So that's the thing about refining your entries. Like this is just a re-entry. You can use other blocks as re-entries in the market. Let's say you missed this first move, just like what we're seeing on the dollar index. Yeah, so we're expecting some massive drops to the side. Yeah, so you can interpret that to other currency pairs that has the USD, and you find setups. But this is the H1 outlook. I hope you're following, right? So that's it for now, and we'll call it a day. Call it a day, guys.
Is the session recorded?
Yeah, it's recorded. I'm using my screen recorder. I hope it's, yeah, I'll probably upload it on YouTube or on the channel. Yeah. So in case you have any questions and inquiries, you could slide in my DM, message me directly. I'm going to uh, we'll have just about 2 minutes here. So I'm just going to drop my digits. Okay, my take on minimum liquidity trade. Liquidity to trade. Um, I don't know. I don't know. Like equity to trade, it's one thing, and the skill is another thing. So you might have $1 million and you don't have the skill, and you can still blow it up, right? So
Mm-hmm.
yeah, so you can have 10 USD and you grow it to $1,000. So the whole thing is centered on the skill. I wouldn't really place much emphasis on equity. Whatever you have to fund, you can fund your account. And basically, I send free setups, so you can trade the setups. You have $50, $100 on your VIX account. You take the setups with the minimum, and you make a whole lot of profits with that. So we have just about 1 minute, and I'm just going to drop my digits on the chat box. So in private chat me, I can private chat. So we talk about setups and a whole lot of other things. Yeah, if you have a VPS, if you're on this meeting and you have a VPS, yeah, kindly hit me up after the session. So it's something we could work on.